Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Thoria and with me is Vivek Iyer. Well, Vivek, the screen is looking starkly different as compared to what we had seen yesterday. Much like the weather outside, the markets do look a little bit gloomy as of now, but the midcap end of the market is doing relatively better.
That's right. Good afternoon. It's been a very, very volatile trading session. Midcaps holding out above the flat line just for the time being. We don't know whether by the end of the session that will hold out or not. We have quite a lot lined up for the show, a management interaction as well lined up a little later on. But let's start off with the top headlines. After two sessions of strong gains, stocks consolidate amid global geopolitical uncertainties. IT and FMCG and autos drag, even as realty and PSU banks eke out gains. Midcaps fare better.
Interglobe Aviation co-founder Rakesh Gangwal sells another 5.7% stake in Indigo Airlines, the parent, for nearly 12,000 crore rupees. This is the sixth largest chunk sold since 2022 via block deals, and that leaves him with under 8% in the carrier. On the other hand, the promoters of PG Electroplast sell 5.6% stake via block deals, while the parent of Sagility India offers up to 15% equity at a base price of 38 rupees per share to meet the minimum public holding norms.
Trade gain dips over 8% as growth and margin guidance for FY26 disappoints. Projected revenue growth of 6 to 8% in FY26 is likely to result in trade gain's weakest growth year since its listing in December 2021.
Meanwhile, Olectra Greentech trades under pressure as the Maharashtra government cancels the company's e-bus tender worth nearly 10,000 crore rupees as it fails to supply 5,150 leased electric buses within the stipulated timeline.
Schneider Electric gains on the back of Q4 numbers. The company reports its highest year-on-year revenue growth and sees a sharp profit net profit too jumps on a year-on-year basis. Welcome to Midcap Radar. Well, as you can see on your screen, the whole host of results that have just been declared. Naukri or Info Edge just declared its results around 10 minutes back. That particular stock near the day's lowest point, it appears to have missed what the street was anticipating, especially in terms of EBITDA as well as profitability. And as you can see on the bottom of your screen, Shriram Properties has declared its Q4 results as well. Revenues higher by 35%. Profitability to more than doubling on a year-on-year basis, and that stock at the day's highest points jumping over almost 10% in the intraday session. But a whole host of other stocks is what Hormaz has on his radar. He's standing by the wall with the list of the top stocks that are moving around in the broad end of the markets.
Well, extreme reactions on both sides of the spectrum when it comes to earnings. Shriram Properties at the highest point of the day, 10% higher. Not so for Info Edge. But of course, the day has been such, right? We've seen both ends of the spectrum for the markets have tested the highs of the day, have tested the lows of the day as well. And some of the losers in the broader markets, you see Sumitomo Chemicals at 5.5% lower. ACE reporting earnings is down 4%. And Emcure Pharma, after 3 days of very solid gains, is seeing some bit of profit booking in today's trading session. Other than Info Edge and Shriram Properties, look at the earnings reactions here. Bayer Crop, the top gainer on the Nifty 500, 12% higher. Brainbees is extending its losses now down to the lows of the day, as is Blue Dart. But Schneider Electric is holding on to some gains of around 4.5%. Some other newsmakers, Olectra Greentech just issued a clarification saying that the company has not received any such order cancellation notice yet in the SPV that they have formed for the execution of this order. Sagility, of course, with the OFS is in a lower circuit, and GE Vernova continuing to build on to the gains that we saw in yesterday's trading session, although off the highs of the day. Volume stocks doing well on the volumes front. ITI 9.5% higher, of course, little float here, but CCL Products doing well for itself, and Credit Access Grameen at one point was up 9%, still holding on to gains of around 4% on strong volumes. And lastly, some other names that are bucking the trend in today's session. Look at AWL Agri, the erstwhile Adani Wilmar is now up 5%. LG Equipment's at the highs of the day, as is Garden Reach Shipbuilders trading with gains of between 3 to 4%. Back to you guys.
Well, thank you so much for that, Hormaz. And you pointed out GE Vernova. There has been a follow-up gain after the company reported a good set of numbers yesterday. But in fact, the stock has managed to hit its all-time high today. A couple of other industrial counters as well in focus. Hitachi Energy is also seeing some positive rub-off. The stock is also surging high, and so is Triveni Turbines. Cummins, keep in mind, the company is expected to report its numbers tomorrow. So we'll be watching out for the kind of numbers that come through from the company. The stock also up in trade today. today, up almost 1%. But it's a good time to welcome Shrikant Chauhan for a technical check on the market. Good afternoon to you, Shrikant. This is Vamakshi joining in. Well, it was a good session yesterday, but the market seemed to be taking a bit of a breather. What is your take on the Nifty as well as the Nifty Bank?
Good afternoon, Vamakshi. Good afternoon, Vivek. See, like Nifty, it's stuck in the range. It is failing to cross the level of 25,100, which it has made in the current upward rally. And on the downside, 24,450 is acting as a major support for the market. And currently, if we see the market, then we are at the equilibrium level. So, and also if we consider the India's volatility index, then that is also around 18.50. So most of the time, whenever we see such type of, I'm going to say, unusual sort of activity in India's volatility index, we see some more fluctuation within the range. And then the strategy should be to buy on dips. So today in the morning, we saw some recovery, but again, it failed at 25,000. So now the next strategy should be to look for adding position only if the market falls back to the levels of 24,500. Otherwise, it is better to buy some stocks to take some, I'm going to say, trading position in this market.
So which are the stocks, Shrikant, that one should look at?
So in that space, we would like to like go with some PSU banks or with those banks where there is like clarity in terms of their overall trend of last 10 days. IDFC First Bank looks good at current levels, which is currently trading at 67.68. If we consider its technical formation, then it is consolidating, but and in fact, it has been consolidating since last for 4-5 days. Based on its formation, I'm expecting stock to move towards 72 or 73 in the near term. And in the long run, maybe again 80, 85 sort of levels we can see. So at this level, IDFC First Bank looks good. The other stock on which we are bullish is from the metal space, and that is Hindustan Zinc. That is also, I think, it is currently forming bullish consolidation formation. It is above its upward barrier at 453. And based on its formation, the stock is heading for the levels of 475. That's the view based on technicals. So 475 should be the immediate target for Hindustan Zinc. In the long run, maybe 500. And we can keep stop loss around 440 for the same.
Well, thank you so much for that, Shrikant. Keeping an eye out on IDFC First Bank as well as Hindustan Zinc. But before we slip into a short break, we're excited to unveil our brand new global business news channel, the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. Welcome back. You're watching Midcap Radar on CNBC TV18. Let's put the spotlight on Action Construction Equipment. The company is down in trade after the company reported its Q4 numbers. The company has missed their revenue guidance for FY25 marginally. To discuss this and more, we now are being joined by Saurabh Agarwal, who is the Executive Director at the company. Good afternoon to you, Mr. Agarwal. You had guided for 15% year-on-year growth in the top line in FY25, while you've posted a revenue growth of somewhere around 14%, which is much lower as compared to your guidance. So what has led to the miss this time around?
Nothing much. We missed it by about a percentage. So when the year started, we were hopeful that we should be able to do something around 15 to 20%. But I think after the second quarter and especially after the election results, we toned it down rather from a 15 to 20% to 15%. And yes, unfortunately, we missed it by about a percentage. So we are a little upwards of 14%. But I think that's how life is.
Sure, and this 14% to 15% revenue growth, that guidance that you've given for FY26 is much slower as compared to what you've done in the previous years, wherein you've grown by almost 30%. So why is this moderation in growth coming through?
See, the overall scenario seems to be a little, out of place with respect to whether it's geopolitics, whether it is, let's say the export potential out of going out of the country, and also keeping in mind that the manufacturing is also a big, customer segment for us. So looking at the holistic picture, and especially the quarter one which has started, is a little subdued, and primarily because there has been a transition from BS3, BS4 emission norms to BS5, and the costs and pricing for customers have increased. So there is a little delay in ordering. So because of a weak Q1, which we feel can be weak, so the entire year is going to be affected. So that's why we pegging it around 14-15%. But I still feel that again, end of quarter two is the right time to be able to precisely know what is going to happen in the year.
Understood that, Saurabh. So for H1, you're anticipating a slightly muted execution trend, which is what is leading you to give a slightly subdued guidance of 14 to 15%. End of H1, you expected to get revised higher, if we've got that right. Give us a sense of execution trends on ground. You've said that there is a bit of a slowdown. Also, is there any issues in terms of raw material availability? That's also something that folks across the industry have highlighted. And what is the EBITDA margin that you're penciling in for FY26?
There are no execution issues, and there are no supply chain or any other issues of any type. It's just that there is slowness in the market, and especially after this altercation which has happened between India and Pakistan. So the things have, they've come to some sort of a, let's say, a more slowness, or let's say to some sort of a standstill, especially in the last 10-15 days, started to improve now. And with respect to our margins, I think our margin profile between 17 to 18% is what I think we should be easily able to maintain, if not increase it. That's what we're looking at.
All right. And, out of the 14 to 15% growth that you've guided for, how much of it would come through volumes?
See, what we have currently planned and projected, I think about 7-8% is going to come through price increase. And I think about another 7-8% is going to come through volumes. The volumes can be more than this. And that's why, we'll have to wait till end of quarter two to figure out.
How would each of your, end user equipments do, cranes, material handling, how would they grow in FY26?
See, we have two main segments. One is crane, metal handling, and construction equipment. And the other is agri. Agri is about 7% of our business. So we are looking at a 14-15% on both ends. And within cranes, construction equipment, and metal handling, we feel that in this year, maybe the metal handling and the construction equipment will be slightly faster than cranes within that segment. But on the whole, I think both our main segments will grow at about 14-15%.
Okay. Sort of, in your presentation, you've also highlighted a large win that you've got as from the Ministry of Defence, close to 420 crores worth of an order coming in there. Any visibility on further order wins you're expecting from there, given that this is expected to be a high spend year? And number two, exports currently 8 to 10% of the total pie. What is the kind of growth you're penciling in there?
Yeah, this government order, this Indian defence order, is one of our largest in any sense. Whether this is our largest order, and obviously we got getting it from the Indian defence really makes us feel very proud. We've been working on this last 2-3 years and gone through the entire process. So hopefully we'll be starting execution Q3 onwards, and we have a 3-year time frame to finish this. But we'll try and do this a little bit in this year and most of it in the next year. So that's how it, and obviously our total order book with respect to defence is close to 485 crores. So, some more part of the defence orders, other orders will also get executed in this year. And it's a continuous process. It keeps on happening. Yes, this is a big one that has come across. And yes, in the export sector, we definitely look at, doing a 10% plus with respect to contribution from the export. Last year was really not great for us with respect to export, but I'm sure we will pick up again.
Sure, and you also have a JV with Kato. So the production was expected to start in the second half of this year. So is this largely on track? And when this does happen, what is the kind of revenue contribution as well as the margin potential that you're expecting?
Yeah, hopefully we should be able to start sometime in Q3, Q4. No, sorry, Q2, Q3. Sorry. And the immediate revenue potential will be close to about 400 crores, which can be achieved in 1 or 2 years once we start. And over a slightly longer period, this can easily expect 800 to 1,000 crores.
Okay. Saurabh, another question that across the industry, what we are getting is newer emission norms this time around. Are they impacting your product mix, your sales mix in any sort of manner? Has there been a certain element of pre-buying already that has occurred, especially as far as the value chain is concerned? And do you enjoy higher margins given the fact that you would have had to take price hikes?
There was definitely some pre-buying starting from December. Putting a percentage to it could be around maybe 10-12%. That is also another reason for a slightly weaker start to this year. And we have taken price hikes according to our input cost increase because of the BS5 engines and the electronics. And it is prominent to note that, engines below 50 horsepower, which is about 60% of our production with respect to equipment using that, there the price increase is much steeper, is about 12 to 13% range. So that is where, the dilemma between the buyers. It takes 1 or 2 months to settle down. So hopefully everything should evolve well going forward in the next month and definitely July onwards. Yes, we have one thing in mind that the first half is traditionally slow for us. And then with monsoons and everything coming in. And second half is much bigger for us. It's about 55-60% of our revenue. So hopefully it has played out like that in the last 30 years and it will again.
Sure. And if you can just help me with your capacity utilization levels, what were they at? What is the capex that you're planning for FY26 and what segment would it largely be towards?
Yeah, our capacity utilization, we expanded our capacity in the last year and some of it was put in place in Q4. So keeping that in mind for the last quarter, we were at about 70% capacity utilization, blended with respect to our cranes and construction equipment metal handling business. And with respect to capex, I think last year we did close to 144 crores and most of it going towards expansion and modernization. And we also bought some land for future expansion. And for the current year, we have a plan of close to 300 to 350 crores, out of which about 100 crores is planned for modernization and upgradation. And we are starting to build a new plant for our tower cranes, especially, with a total investment of about 250 crores approximately. So about 100 crores of that would be spent in this year. And yes, the balance of the land for which we have already signed contracts and agreements, so that will be executed. So we will close about 150 crores. We'll go in for lands which we are procuring for future expansion.
Right. Thank you so much, Saurabh, for joining us, giving us a sense of how exactly business is panning out. H1 slightly subdued, but we expect a strong pickup H2 onwards. Thank you once again and wish you all the best for FY26. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Midcap Radar. Well, two stocks from the broad end of the markets that are seeing some pressure after their Q4 results are Brainbees Solutions and Blue Dart. Manglam joins in with the details.
Well, if you look at Blue Dart, the company has been a victim of the underlying macroeconomic problems, and that's what they've been attributing their weakness in performance to. If you look at the revenues, they grew by about 6-7%, but we did see a decline in their EBITDA, and margins came off by about 200 basis points, and that's reflected on their net profit as well, which has fallen all the way from 77 crores to 55 crores. The management has attributed this to three major reasons. One is geopolitical uncertainty, the sectoral challenges, as well as the weakness that we're seeing in macroeconomic situations as well. They do believe that the next year they have cautious optimism basis the kind of external challenges that they face right now. But the street is awaiting improvement in numbers, and as a result of which Blue Dart is lower today. The other one, Brainbees Solutions, revenue growth, no problem. It's the operational performance which has actually had the street to worry. And the net loss also increased from 43 crores all the way up to 111 crores. Though on its old calculations, the company said that their EBITDA has grown by about 20%. So they've taken the one-offs away, and at the same time, they've also added the other income aspect to it, which implies that their EBITDA for the fourth quarter has been close to around 100 crores. Importantly, the India business, which is doing well, which has seen some margin expansion as well, is supporting the overall numbers. But the international business and the Brainbees business has actually seen a widening in their EBITDA losses. So the international business, for instance, has seen their EBITDA loss increase from 25 crores to about 30 crores. And you look at the Brainbees business as well, that has, the Global Bees business rather, that has also seen an EBITDA increase, the widening of the EBITDA loss from close to 25 crores to around 25 crores itself, despite revenues growing by about 100 crores. So all said and done, weakness in performance, the operational performance comes in for both Blue Dart and Brainbees. Both these stocks understandably lower today.
Well, thank you so much for that, Mangalam. A soft quarter from both Blue Dart as well as Brainbees. But now let's also look at one stock that is surging higher in trade today. In our special segment, Midcap Spotlight, Ria will focus on Apollo Microsystems and tell us why the stock is up 11% in trade today. Good afternoon, Ria.
Well, yes, Apollo Microsystems has been trading higher in today's session on the back of some very strong commentary from the management in yesterday's earnings call. Now, remember, even last week, the company had reported a very healthy set of numbers for Q4 with the revenue going up by around 19% over the previous year. And we also saw an EBITDA margin expansion of around 100 basis points in this quarter. The order book is also very strong at rupees 615 crores. Now, coming to what the management has said yesterday, going forward, they're expecting a revenue CAGR of around 45 to 50% over the next 2 years. But this is X of the recent acquisition of Ideal Explosives. But if you factor in the contributions from the recently acquired company, the revenue growth is expected to double in FY26 itself. In terms of margins, operating margins are expected to improve in the first half of FY26, but going into the second half of the fiscal year and into FY27 as well, the margins are expected to moderate a little bit owing to the ongoing and the planned capital investments being undertaken by the company. In terms of the order book, that is expected to triple by FY26. So from the current rupees 615 crore levels, they expected to go up to approximately rupees 1800 crores. They've also got some huge orders on the anvil. They're expecting orders related to QRSAM from Bharat Dynamics within the next 2 quarters itself, and they're also expecting some orders for subsystems for Project Kusha. Now, apart from this, working capital cycle days are also expected to reduce by around 100 to 120 days from FY27 onwards from the current 423 levels. And apart from this, the company also plans to use the proposed preferential fundraise of rupees 816 crores for working capital and for R&D expenses going ahead. So on the back of this very strong commentary coming in from the management, the stock was up over 15% and 1 point in the session today.
Well, thank you so much for that, Ria, for giving us a perspective on Apollo Microsystems. The stock is up and away in trading session today. But, when we look at the markets for now, the Nifty is still managing to hold above the 24,800 mark. The Midcap Index is relatively doing better, flip-flopping between the green and the red. But that's all we have on this edition of Midcap Radar. MF Corner when we return.